From the studios of K.L.P. Entertainment, this is SNN Primetime News.
Good morning and welcome back to SNN Primetime News. Berkshire Hathaway's big mystery stock wager could be revealed soon. Berkshire Hathaway, led by legendary investor Warren Buffett, has been making a confidential wager on the financial industry since the third quarter of last year. The identity of the stock, or stocks, that Berkshire has been snapping up could be revealed Saturday at the company's annual shareholder meeting in Omaha, Nebraska. That's because unless Berkshire has been granted confidential treatment on the investment for a third quarter in a row, the stake will be disclosed in filings later this month. So the 93-year-old Berkshire CEO may decide to explain his rationale to the thousands of investors flocking to the gathering. The bet, shrouded in mystery, has captivated Berkshire investors since it first appeared in disclosures late last year. At a time when Buffett has been a net seller of stocks and lamented a dearth of opportunities capable of truly moving the needle at Berkshire, he has apparently found something he likes, and in the financial realm and no less. That's an area he has dialed back on in recent years over concerns about rising loan defaults. High interest rates have taken a toll on some financial players like regional U.S. banks, while making the yield on Berkshire's cash pile in instruments like T-bills suddenly attractive. When you are the goat of investing, people are interested in what you think is good, said Glenview Trust Company Chief Investment Officer Bill Stone, using an acronym for greatest of all time. What makes it even more exciting is that banks are in his circle of competence. Under Buffett, Berkshire has trounced the S&P 500 over nearly 6 decades with a 19.8% compounded annual gain, compared with the 10.2% yearly rise of the index. Berkshire requested anonymity for the trades because if the stock was known before the conglomerate finished building its position, others would plow into the stock as well, driving up the price, according to David Cass, a finance professor at the University of Maryland. Buffett is said to control roughly 90% of Berkshire's massive stock portfolio, leaving his deputies Todd Combs and Ted Weschler the rest, Cass said. While investment disclosures give no clue as to what the stock could be, Stone, Cass and other Buffett watchers believe it is a multi-billion-dollar wager on a financial name. That's because the cost basis of banks, insurers and finance stocks owned by the company jumped by $3.59 billion in the second half of last year, the only category to increase, according to separate Berkshire filings. At the same time, Berkshire exited financial names by dumping insurers Markel and Globe Life, leading investors to estimate that the wager could be as large as $4 billion or $5 billion through the end of 2023. It's unknown whether that bet was on one company or spread over multiple firms in an industry. If it were a classic Buffett bet, a big stake in a single company, that stock would have to be a large one, with perhaps a $100 billion market capitalization. Holdings of at least 5% in publicly traded American companies trigger disclosure requirements. Investors have been speculating for months about what the stock could be. Finance covers all manner of companies, from retail lenders to Wall Street brokers, payments companies and various sectors of insurance. Charles Schwab or Morgan Stanley could fit the bill, according to James Shanahan, an Edward Jones analyst who covers banks and Berkshire Hathaway. Schwab was beaten down during the regional banking crisis last year. They had an issue where retail investors were trading out of cash into higher-yielding investments, Shanahan said. Nobody wanted to own that name last year. So Buffett could have bought as much as he wanted. Other names that have been circulated, J.P. Morgan Chase or BlackRock, for example, are possible, but may make less sense given valuations or business mix. Truist and other higher-quality regional banks might also fit Buffett's parameters, as well as insurer AIG, Shanahan said, though their market capitalizations are smaller. Berkshire has owned financial names for decades, and Buffett has stepped in to inject capital and confidence into the industry on multiple occasions. Buffett served as CEO of a scandal-stricken Salomon Brothers in the early 1990s to help turn the company around. He pumped $5 billion into Goldman Sachs in 2008 and another $5 billion into Bank of America in 2011, ultimately becoming the latter's largest shareholder. But after loading up on lenders in 2018, from universal banks like J.P. Morgan to regional lenders like PNC Financial and U.S. Bank, he deeply pared his exposure to the sector in 2020 on concern. Last May, Buffett told shareholders to expect more turbulence in banking. He said Berkshire could deploy more capital in the industry, if needed. The situation in banking is very similar to what it's always been in banking, which is that fear is contagious, Buffett said. Historically, sometimes the fear was justified, sometimes it wasn't. Wherever he placed his bet, the move will be seen as a boost to the company, perhaps even the sector, given Buffett's track record of identifying value. It's unclear how long regulators will allow Berkshire to shield its moves. I'm hopeful he'll reveal the name and talk about the strategy behind it, Shanahan said. The SEC's patience can wear out, at some point it'll look like Berkshire's getting favorable treatment.
Dow closes higher by more than 400 points as April jobs report bolsters Fed rate cut hopes. Live update stocks jumped sharply Friday after a softer-than-expected April jobs report boosted hopes that the Federal Reserve could start cutting interest rates soon. The Dow Jones Industrial Average gained 450.02 points, or 1.18%, to settle at 38,675.68. The S&P 500 surged 1.26% to finish at 5,127.79 and notch its best day since February, while the Nasdaq Composite rallied 1.99% to close at 16,156.33. All the averages capped off a winning week. The Dow and Nasdaq rose 1.14% and 1.43%, respectively, while the S&P 500 added 0.55%. Friday's non-farm payrolls report showed 175,000 jobs gained in April, below the 240,000 jobs expected by economists surveyed by Dow Jones. The unemployment rate edged up to 3.9% versus 3.8% in the prior month, according to the Bureau of Labor Statistics. Wage figures also came in less than expected, an encouraging sign for inflation. It's really eased investors' fears that the economy may be overheating or re-accelerating, and it's reviving hope for rate cuts, said John Hancock Investment Management's co-chief investment strategist Emily Rowland. That's why rates are falling, bonds are rallying, and equity markets are up. Bad news for the jobs market means the Fed may be able to start cutting later this year. Following April's weaker-than-expected job growth and moderating wage gains, traders are pricing in a second rate cut by the end of the year. Fed funds futures trading data suggests a nearly 50% likelihood of a 25 basis point rate cut in September, according to the CME Group's FedWatch tracker of futures market pricing. Rates also dropped following the labor report, with the 10-year Treasury yield briefly falling below 4.5%. The movement benefited rate-sensitive megacap technology stocks, with Nvidia and Advanced Micro Devices advancing more than 3%. Microsoft and Meta platforms gained 2% each, while the S&P's information technology sector surged 3%. Strong quarterly reports from major Dow components also contributed to Friday's rally. Apple advanced nearly 6% after it announced a $110 billion share repurchase and a top and bottom line beat. Biotech stock Amgen surged nearly 12% after posting better-than-expected earnings and offering a positive update on an experimental obesity drug. Shares notched their best day since 2009. Stocks closed higher Friday and capped off a winning week. The Dow Jones Industrial Average gained 450.02 points, or 1.2%, to settle at 38,675.68. The S&P 500 surged 1.3% to finish at 5,127.79 and notch its best day since February, while the Nasdaq Composite rallied 2% to close at 16,156.33. All the averages capped off a winning week. The Dow and Nasdaq rose 1.18% and 1.26%, respectively, while the S&P added 0.55%. Shares of Avidity Biosciences rose almost 5% after Bank of America said it is optimistic on the pipeline of muscle disease treatments. Analyst Jeff Meacham initiated research coverage with a buy rating. Meacham's $40 price target implies potential upside of 56% from Thursday's close, which would add to an already strong year for the stock. With an innovative platform and a path to commercialization as early as 2026, we view RNA as an attractive risk-reward opportunity, Meacham told clients. RNA is the stock's ticker. Information technology stocks rallied on Friday, lifting the S&P 500 sector 3.4%. Apple led those gains, surging 7% after announcing strong quarterly results and a stock buyback plan. Enphase Energy and Arista Networks popped more than 5%. Semiconductor stocks Nvidia, Advanced Micro Devices, Applied Materials and Broadcom rose about 3% each. Materials was the second best performing sector, rallying 1%. Freeport-McMoRan and Steel Dynamics added about 3% each. Albemarle, Nucor and Sherwin-Williams rose 2% each. Apple, the tech giant, jumped nearly 7% after announcing it would repurchase $110 billion in shares. Apple also posted beats on the top and bottom lines, reporting fiscal second quarter earnings of $1.53 per share on $90.75 billion in revenue. Live Nation Entertainment shares jumped 9% on the back of better-than-expected first quarter revenue. Management said it expects a strong stadium year in 2025 and continued growth in concert attendance. HSBC said in a client note that yen weakness plays a key role in reflating Japan's economy, a goal that the Bank of Japan expects to achieve this year. After years and years of losing competitiveness, exporters are at last feeling the lift from exchange rate realignment. And, one might suspect, an even weaker exchange rate, and for longer, may be needed, to turn the lift into an enduring manufacturing renaissance, Frederick Newman, chief Asia economist at HSBC said. Newman said the weaker yen is boosting Japan's service sector via tourism, in turn helping lift inflation expectations. A weaker yen, in other words, is not entirely unwelcome as long as the decline is orderly. Thus, don't expect the BOJ to rush into aggressive tightening just because the exchange rate is wobbly, Newman added. Demand for power and data centers has been taking the world by storm, and it's not just the U.S. tech giants that are set to benefit, according to Goldman Sachs. Europe is set to see a pickup in demand and electricity consumption by as much as 50% in the next 10 years, reversing the slump it has been facing since 2008, the investment bank's analysts noted. The massive growth translates to an investment of nearly €800, $857.5 billion, in Europe's power transmission and distribution network, they added, naming stocks with over 30% upside potential on their radar. European companies are more cash-rich than they have been in recent history. Companies in the Stock 600 index have nearly €1.5 trillion, or $1.6 trillion, in cash on their balance sheets, that is 25% higher than pre-pandemic levels, according to Goldman Sachs. The dividend yield differential between Europe and the US is the narrowest it has ever been, making Europe more appealing, according to Goldman Sachs. In other words, Europe has rarely looked cheaper on an absolute and relative basis, it said. CNBC Pro takes a look at some stocks that turned up on Goldman's screen of high dividend yield names. They are companies in the Stocks Europe 600 with the highest 12-month forward dividend yields in each sector. Apple, the iPhone maker, advanced 7% as it announced a $110 billion share repurchase and a top and bottom line beat. Apple's fiscal second quarter earnings came in at $1.53 per share, while revenue was $90.75 billion. That surpassed analysts' estimates for earnings of $1.50 per share on revenue of $90.01 billion, per LSEG. Expedia, the online travel company, dropped roughly 8% in after-hours trading. Expedia lowered its full-year guidance to a range of mid to high single-digit top-line growth, citing slowness in VRBO and the rate of acceleration in business-to-consumer so far. Expedia posted a beat on first-quarter revenue, which came in at $2.89 billion, surpassing analysts' estimates of $2.81 billion, per LSEG. Amgen, the biotech company, surged 11%. Amgen posted adjusted earnings of $3.96 per share on revenue of $7.45 billion in the first quarter. Analysts polled by LSEG anticipated earnings of $3.87 per share and revenue of $7.44 billion. The company also said it would move its injectable obesity drug into a phase 3 trial, but it will no longer pursue an experimental weight loss pill it had in development.
Apple stock has best day since 2022 after earnings beat, $110 billion stock buyback. Apple shares popped 6% Friday after the company reported better-than-expected second-quarter earnings and the largest-ever stock buyback program. It was the best day for the stock since November 30, 2022. The iPhone maker announced Thursday it would repurchase $110 billion of its shares, the biggest buyback in U.S. history, surpassing Apple's prior repurchases. The company posted earnings of $1.53 per share on revenue of $90.75 billion, exceeding analysts' estimates of earnings of $1.50 per share on revenue of $90.01 billion, according to LSEG. But overall sales decreased 4% and iPhone sales dropped 10% year-over-year during the quarter, indicating flagging demand for the smartphone's latest generation. Apple CEO Tim Cook told CNBC that quarterly sales suffered from a difficult comparison to the year-earlier period. Analysts at Bank of America reiterated their buy rating of Apple stock, calling it a top pick, and raised their price target to $230 from $225 in a Friday investor note, writing that they expect the company to roll out generative artificial intelligence features for the iPhone this year. Apple is growing iPhones in mainland China. Estimate revisions are turning positive and Gen AI features will drive a strong upgrade cycle, they wrote. J.P. Morgan analysts, maintaining an overweight rating, lifted their price target for Apple to $225 from $210 on Thursday, pointing to resilient year-over-year iPhone revenues and expectations of an upgrade cycle-led tailwind in iPads ahead of Apple's product launch event next week. All in all, while modest revenue growth year-over-year might not be the ideal outcome, they wrote, it now provides visibility into higher revenue opportunities in the coming years with tailwinds from product cycles across hardware devices as well as an AI-led smartphone cycle further boosting growth. Morgan Stanley analysts retained their overweight rating of Apple and hiked their price target to $216 from $210 on Friday, citing the company's quarterly performance, year-over-year growth in iPhone shipments to China in March, stock buyback and hints at AI updates to come.
Amgen stock soars on weight loss injection progress as Novo Nordisk, Eli Lilly shares slide. Amgen's stock rose more than 12% on Friday after the drug maker teased positive initial data on its experimental weight loss injection. That fueled investor concerns about new competition in the rapidly growing weight loss drug industry, sending shares of the current obesity players, Novo Nordisk and Eli Lilly, lower on Friday. Eli Lilly shares dropped nearly 3%, while Novo Nordisk's US-traded shares fell more than 1%. Novo Nordisk's stock was already under pressure on Thursday after sales of its blockbuster weight loss injection Wegovy missed analysts' estimates for the first quarter due to lower pricing. During a first-quarter earnings call Thursday, Amgen's CEO Bob Bradway said he was very encouraged by early results from the mid-stage study on the company's obesity injection, MariTide. Investors have been laser-focused on that drug and the rest of Amgen's weight loss drug pipeline as it races several other drug makers to join the booming market. We are confident in MariTide's differentiated profile and believe it will address important unmet medical needs, Bradway said during the call. Amgen did not provide specific data, but its chief scientific officer Jay Bredner said that patient dropout has not been an issue. He said Amgen is on track to release initial data for the study in late 2024 and is also planning late-stage studies in patients with obesity, obesity-related conditions and diabetes. Bradway also highlighted the potential competitive advantages of the injection, which patients will take using a handheld auto-injector once a month or even less frequently. That could offer far more convenience than the weekly injections on the market, Novo Nordisk's Wegovy and Eli Lilly's Zepbound. While there has been significant debate on the potential efficacy and safety of MariTide since the initial disclosures of the phase I data in 2022, we have grown more confident in the potential for the therapy to meaningfully differentiate from other therapies in development, particularly in regard to treatment intervals. William Blair analyst Matt Phipps said in a research note on Friday, adding that the firm is upgrading its rating on Amgen shares to outperform. Notably, Amgen said it was scrapping its experimental oral obesity drug. But that development was not as important as the MariTide update, Jefferies analyst Michael Yee said in a research note Thursday. Amgen's Bradway said the company has started expanding manufacturing for MariTide. That's a signal that the company is preparing to produce enough supply of the drug, a major issue that Novo Nordisk and Eli Lilly have grappled with over the past year and a half. Still, investors were pleased with Eli Lilly on Tuesday after the company assured them that it could overcome ongoing supply constraints for its popular drugs. Eli Lilly hiked its full-year guidance in part due to optimism around increased production of Zepbound, its diabetes injection Mounjaro, and similar drugs for the rest of the year. Eli Lilly has several manufacturing sites either ramping up or under construction, including 2 locations in North Carolina, 2 in Indiana, 1 in Ireland, and 1 in Germany, along with a 7th recently acquired site, executives said during an earnings call. Meanwhile, investors were less impressed with Novo Nordisk on Thursday. Sales of Wegovy during the first quarter nearly doubled but came in under analysts' expectations. That signals that Novo Nordisk is struggling to meet demand for the treatment. But Novo Nordisk also pointed to fierce competition from Eli Lilly's Zepbound, which has shaken up pricing dynamics for Wegovy in the US. Net pricing for both Wegovy and Ozempic will be lower in the US throughout the year due to the increasing volume and competition. Chief Financial Officer Karsten Munk Knudsen said on a first quarter earnings call on Thursday.
From the studios of K.L.P. Entertainment, this is SNN Primetime News.
AMD says it will sell $4 billion in AI chips this year. Stock drops on inline forecast. Advanced Micro Devices reported first quarter earnings and sales on Tuesday that were slightly ahead of Wall Street expectations and provided an inline forecast for the current quarter. Shares dropped 7% in extended trading. AMD said it expects about $5.7 billion in sales in the current quarter, in line with Wall Street estimates of the same approximate total. That would represent about 6% annual growth. The company reported net income of $123 million, or 7 cents per share, versus a net loss of $139 million, or 9 cents per share, during the year-earlier period. Revenue was up about 2% from a year earlier. AMD shares have risen 14% in 2024, so despite meeting forecast estimates and signaling growth in AI chip sales, Tuesday's results were not enough to prevent the stock from sliding. The chipmaker said its closely watched data center segment grew 80% year-over-year to $2.3 billion thanks to sales of its MI300 series AI chips, which compete with NVIDIA's graphics processing units. CEO Lisa Su said Microsoft, Meta, and Oracle use AMD's MI300X. AMD said it had sold over $1 billion of the chip since it launched in the fourth quarter of 2023. AMD expects $4 billion in 2024 AI chip sales, up from a $3.5 billion forecast in January. For comparison, NVIDIA, the biggest vendor of AI server chips, reported $18.4 billion in sales, mostly AI chips, in its data center segment alone for the January quarter, the most recent for which financial results are available. Su told investors on Tuesday that the company was working on new AI chips and successors to the current generation. We're getting much closer to our top AI customers. They're actually giving us significant feedback on the roadmap, Su said. AMD also makes central processors that are often paired with advanced AI chips in servers. Su told analysts on a call that the company believed it had taken market share in the server CPU segment, likely from Intel. Su said that AMD sees signs of improving demand for its CPUs due to the AI server boom. AMD's weakest division was its gaming segment, which was down 48% year-over-year to $922 million, which the company said was due to lower chip sales for game consoles and PCs. AMD makes chips for Sony's PlayStation 5, for example. AMD's gaming sales trailed a street account estimate of $969 million. AMD's original business, processors for chips and PCs, is reported as client segment revenue. AMD reported $1.4 billion in first quarter sales, an 85% annual increase, suggesting that last year's PC slump is over. AMD's PC processors can run artificial intelligence programs locally, which would allow it to power so-called AI PCs that many industry participants are banking on to drive new laptop and desktop sales. The company's embedded segment, made up of products acquired as part of the Xilinx acquisition in 2022, reported falling sales, dropping 46% year-over-year to $846 million, lagging Wall Street expectations of $942 million.
from the studios of K.L.P Entertainment, this is SNN Primetime News.